Welcome to another educational video by my solo 401k Financial. In the next few minutes, we will cover the top 7 tips to know before opening a solo 401k. Please like this video and subscribe for more videos like this. Please ask questions in the comments and we will respond within 24 hours. You need to qualify to set up a solo 401k. Business owners, including contractors and sole proprietors, are eligible for a solo 401k as long as they don't employ full-time W-2 employees in any business under their control. Please keep in mind that your business could be set up as an LLC or an S-Corp, or you don't even need a formal legal entity. For example, you could be a sole proprietor who simply reports your self-employment income on your 1040. You do need earned, not passive income. To qualify as self-employment activity, the business must pursue steps to be profitable. That is, generate earned income. Generally, this is income that is subject to Social Security and on which you pay self-employment income tax. Investment income is not self-employment income. Investment income would include, for example, dividends from stock. The Solo 401k establishment deadline. Thanks to the Secure Act that was passed in 2019, owner-only employers can now adopt the solo 401k plan by their business tax return due date plus business tax return extension date. It is generally best to set up the plan sooner rather than later, such as the end of the year. You might need time to set up the account if you're looking to make contributions by the deadline. You might need time to process the rollover if you're looking to take a solo 401k loan or make an investment of your solo 401k funds. The Solo 401k contribution deadline. Solo 401k annual contributions, which are based on earned income from self-employment activity, must be made by the business tax return due date plus business tax return extension date. This is clear based on IRS guidance, for example, including IRS publication 560. For example, if your self-employed business is taxed as an S corporation, your solo 401k contribution deadline is March 15th or September 15th if you file a timely extension. If your self-employed business is taxed as a sole proprietorship, your solo 401k contribution deadline is April 15th or October 15th if you file a timely extension. Please keep in mind that this contribution deadline applies to all types of contributions, including employee as well as employer, including pre-tax, Roth, and voluntary after-tax. Funding the solo 401k. A solo 401k can be funded by making an annual contribution and/or by transferring funds from a non-Roth IRA or former employer plan. Please keep in mind that you need to be eligible to set up a plan before you can process a rollover to a solo 401k. As noted, funds from a Roth IRA are not eligible to be transferred to the solo 401k per the Roth IRA rules, but Roth 401k funds in your former employer plan may be transferred. If you're transferring both pre-tax and Roth funds from a former employer, those funds will be transferred in separate checks and then be deposited into separate sub-accounts for the solo 401k. We will handle both the transfer as well as the account setup as part of our services for no additional charge. A separate employer identification number, which is separate from the EIN from your self-employed business or your Social Security number, needs to be set up for the solo 401k. This is clear based on IRS guidance and because a solo 401k is a retirement trust. Setting up the account for the solo 401k. The solo 401k funds must be held in a separate holding account titled in the name of the solo 401k and under the EIN for the plan. Please note that you could have both a bank as well as brokerage account. Separate sub-accounts would also be needed if you have spouses that are both participating in the plan, or if you have both pre-tax and Roth funds. All of this leads to the conclusion that a solo 401k is a powerful way to save for retirement. The solo 401k has become the retirement account of choice for owner-only businesses due to the capability to make large contributions, including pre-tax, Roth, and voluntary after-tax, the ability to take 401k loans, and the freedom to self-direct the plan and alternative investments. Thank you so much for watching. Please like and subscribe. Please contact us at 1-800-489-7571 for more information.